Hi, this is Adam Khoo here, and welcome to my first webinar of 2020. And I'd like to welcome you to the new year and wish you all the very best and a very happy and prosperous new year ahead. So in this webinar, I'll be talking about how I look at the coming year in terms of the financial markets, the stock markets, and where I see the greatest opportunities to generate really high profits at very low risk and to build our account. All right. So before I get into this, let me do a very quick review of the previous year, 2019. So what happened last year? Well, there are a lot of things that happened. We had the yield curve inversion that signaled a recession back in August. We had the ongoing Brexit saga in the UK. We had the Hong Kong unrest and riots. We had Trump tweeting throughout the year, causing massive volatility, some would say manipulation. With the ongoing US-China trade war that was on, that was off, and overall there was a lot of concern that China was slowing down in terms of its economy, right? And towards the last few quarters of the year, many analysts, economists were predicting a recession, right? So if you watch like CNBC or CNN, you read stuff like this, right? Awfully high risk of a global recession in the next 12 to 18 months. And again, many people, experts were advising retailers to sell, right? Like this guy who is an economist says, it's time to start shorting the S&P 500. This was back in October of 2019. And this guy who's the father of the yield curve says it's time to prepare for recession. So basically everyone expected the market to crash. Everyone was bearish on the market, except there was one person, maybe not one, but I know one person who remained really bullish that the market was going to continue to go up. And that person was me, right? Not that me, right? And the reason I was bullish was not because I can predict the future. Remember, no one can predict the future. I'm not a fortune teller. And I tell my investors and my students all the time, never ever attempt to predict the market or attempt to outsmart the market. Simply follow the market. So many of you know that the way I make my investment decisions is I ignore what the media is saying. I don't attempt to make predictions about the market, but I just focus on three things that has served me well for the last 28 years. I've been beating the markets for 28 years simply because I don't follow the crowd. I make decisions very independently. And the first thing I look at are simply the fundamentals of the companies I'm invested in. Remember, when you buy stocks, when you own stocks, you're owning businesses. So you can understand how are the businesses doing. So when I look at the companies in my portfolio, I found that the majority of the stocks I own at that time remained very undervalued. In other words, the price was selling below the true value of the company. Like Amazon was undervalued, Facebook was undervalued, 3M was undervalued, United Health was undervalued, Domino's Pizza was undervalued. All right. So again, most of the companies I own were undervalued, especially things like the banks, JP Morgan, Bank of America, and a lot of the tech companies. So I said, hey, if it's undervalued, I want to hold on to them because it means that it will go up over time, right? The second thing I look at is technical analysis. I look at the charts, I look at the trend, and I always remember, always follow the trend, never go against the trend. So while everyone was bearish and predicted a crash, I said, hey, where's the trend? And you can see that the trend of the market was still clearly on an uptrend, right? The S&P 500, the Dow Jones and NASDAQ, it was on a very clear uptrend, as you can see. For those of you who have been watching and following me, know that I look at moving averages, right? As long as the 50 moving average is above the 150 moving average, right, and they're sloping up, that's a clear uptrend. As long as the price is above the 200 moving average and it slopes up, it's a clear uptrend. So every time there was a Trump tweet, there was a fear of recession, the market came down. As you can see, every time the market came down, what did I do? All right, a lot of people panicked and they sold at the time. So, oh my God, it's coming down. But I bought more, I kept buying more. Why? Because the moving averages were still sloping up. The uptrend was still intact. And every time the price came down, I knew that it was merely a dip on the uptrend. And a dip on the uptrend is the best time you want to add your position, because every time the price dips and it finds support on the moving averages, it bounces off the support, that's when you want to add more shares, right? So because of that, I didn't sell. In fact, I kept buying and buying and adding shares throughout the year. And the third thing that I looked at were what we call macro trends and cycles. And again, those of you receiving my monthly report, I talked about the third term in the US presidential cycle, right? So presidents are elected for 4 years. Trump was 2016, 2017, 2018, 2019. All right, sorry, my bad. He was elected in November 2016, sorry. Yeah, 2017 was his first year. 2017, 2018, 2019, 2020 is his last year. Or whether he gets re-elected, I don't know, right? So 2019 was the third term in his presidential cycle. And historically, the third term of a presidential cycle is always bullish. It's one of the best years of the stock market. Right? At the same time, I looked at the yield on the S&P 500. The dividend yield on the S&P was higher than the yield on bonds. And that's a very, very clear sign that bonds are overvalued and stocks are undervalued, which means there's a rotation of money from bonds to stocks, right? And all this, as many of you know, is written in my monthly report. And you can actually subscribe to my report to know exactly how I study and analyze the markets. This was my October report where I said there are several reasons why I'm still bullish, right? And I gave 5 reasons, like I said, right? The presidential term, the Fed was cutting interest rates, the yield on the S&P was above treasury bond yields, uptrend is intact, and many sectors were very, very undervalued. Banks were dirt cheap, tech was dirt cheap. So that's why I kept staying long in the markets. So what happened in the end, right? Now here's the interesting thing. In 2019, the economy actually did not do too well. The economy really slowed down. In fact, global economic growth fell to a post-financial crisis low, which means it was the lowest point since the financial crisis 10 years ago. Right? So the economy did not do really well. Why? Because of slowdowns in the US, in Europe and China, caused by the trade war and of course Brexit. Now, but the good thing is that not everything slowed down, right? Now, fixed investment slowed down, trade growth weakened, but the labor market, right, employment remained strong in the US. At the same time, consumption remained strong in the US and in China. So that was really important. Now, how did companies do in 2019? Not too well, actually, right? In fact, the earnings growth for most of the companies in the S&P 500 was only 0.3% growth for 2019, which is way below the 10-year average growth rate of 9%. So on average, companies grow their profits at 9%, but last year it only grew at 0.3%. All right, so it was really weak. And as a result of all this weakness, the Federal Reserve, the Fed, after raising interest rates for 5 years, from 0% to 2.5%, they started to do a U-turn and they said, okay, let's protect the economy. They started cutting interest rates for the first time in July 2019. And they cut interest rates 3 times from 2.5% to 1.75%. So that kind of like gave the markets a bit of optimism for the year. You can see in the chart below that all the global economies slowed down in 2019. But here's the interesting thing. Despite the economy slowing down, despite earnings being weak, guess what? Global stock markets had one of the strongest gains in its history. Right? And so I keep telling people that don't just look at the economic data, right? Because the stock market doesn't always follow the economics. Stock markets always price in the future. So the most important thing to really look at is the trend of the market, the price action, and the valuation of the individual companies. As long as companies are undervalued and you buy good companies, as long as trends are up, you know the market's going to go up, right? So the market did really well in 2019. How well did it do? Well, China, the Shanghai index was up 22.3% for the year. 22%, not bad, right? And the US S&P 500 index is up over 28.88%, one of its best annual gains in decades. Okay, so if you look at this chart over here, you can see that almost every stock market in the world went up. So a blind one-legged monkey could have made money in 2019. No matter where you are, you'd have made money, except in one country, Malaysia. That's the only country that actually the stock market went down. Why? I'm not sure, but everything went up. You can see over here, the one in blue is the all country index. So if you take a look at all the countries together, you can see that, right, it's up for the year at about 22% return, right? Leading the way at the purple line, the strongest market in the year, no surprise, is the US market again at about 28%. By the way, this chart is only up to middle of December, right? So towards the end, it actually went up a lot higher. Okay. If you look at emerging markets in blue, emerging markets did not do as well as the US or the UK, but it still went up. And among emerging markets, the best was actually China that pulled everything along. Again, this chart shows you the emerging markets, and sure enough, you can see that China did pretty well, right? Again, this was only up to mid-December. By end of December, China was up about 22%, somewhere over here. And lo and behold, the best stock market performer was actually Russia. That's right, Russia ended up over 40% for the year. Right? Also because the market went down in 2018, so it had to catch up. So here's a quick table to summarize the stock markets globally. Again, the US markets ended up almost 29% up, one of the best years in history. The UK market, despite the Brexit mess, the uncertainty over Brexit, still gave a respectable 12% return. I'm from Singapore, right? And Singapore's not a very strong stock market. It managed only 5% return. China, I expected China to actually beat the US this year. I was wrong, but still not bad. It ended up 22%. But I really believe China will outperform the US in the years to come. But more on that later on. Now, Hong Kong, I thought Hong Kong would suck, but despite the riots and the unrest, Hong Kong still ended up 9% for the year. All right, like I said, Malaysia is the only country that ended up down 6%. Why? I'm not sure. Australia ended up 18%. Well done, Australians. Okay. How about India? Right, India, the Nifty index went up 11.8%. Now, within the US markets, you can see the breakdown of the sectors, right? The best performing sector was none other than technology, right? And that's why most of the stocks in my portfolio are in technology, right? Microsoft and Google and Apple and Facebook, Amazon, they did really well. And that's why I got a really good return in my portfolio, because most of my stocks were actually in technology, okay? Consumer discretionary did really well as well. Stocks like Nike, for example. Consumer staples, things like McDonald's and Coca-Cola did pretty well. Financials did really well eventually. It sucked at the first half of the year. And I said, hey, financial stocks are really cheap. I bought a lot of JP Morgan, Bank of America, and wow, it went up like crazy, up 29% for the year. Basically, everything did well. The only sector that actually underperformed, did not do really well, is energy, the oil and gas sector, because the whole sector has actually been on a downtrend and bearish for about like 8 to 10 years, right? So actually, the fact that it ended up 4% is not bad, right? So energy is the only one that has been lagging, and I see that in 2020, energy could be the one that starts to pick up eventually. More on that later on. So here you go. Here's the chart of the S&P 500. We started the year at about 2,400 points on the S&P, and we ended up at 3,168 points for the year. And again, there's a saying that a bull market climbs a wall of worry, right? So there was so many worries, so much worries in the markets, right? Right, you had Brexit, the trade war, slowing growth, the yield curve inverting, recession, Hong Kong unrest, but it keeps going higher. So I noticed something interesting for the last 28 years. Every time there's bad news in the markets, everyone expects the market to go down, it goes up. The market always goes opposite of what everyone thinks, because the market is there to screw the majority and to profit the minority, right? And when everyone thinks the market is going to go up, guess what? The market crashes. It always goes the opposite. And the funny thing is, when I ask most people still tell me now, the market is going to crash, the market is going to crash. So the more that I hear that people think the market is going to crash, the more I think it's going to go up. The moment everyone says it's going to go up, the moment the shoe shine boy, the moment the moment the toilet cleaner starts buying stocks saying that it's going up, that's when you get out. There's a crash coming. Okay, so that's the US market. China. All right, this is the Shanghai Composite Index, China stock market, and you can see that it started at about 2,440 points, ended up about 3,000 points, so up 22% year to date. So I'm pretty happy with my own investment portfolio returns. This is one of my accounts that I run, and you can see I managed to get a 47.5% cumulative return for the year from January to December over here, 47.5%. So not bad, pretty happy, right? So every year I do my best to get, anywhere from at least a 20% to a 50% return. And you never know when you're going to get a 50% return, 20% return, 30% return. You just do your best and you get what you get. This is another account which I manage, right? And actually this account was from another broker. But the trouble with other brokers is that you can't show the performance of the account. So I transferred everything to now Interactive Brokers, and that's why you can see it only started in May when I transferred my accounts in. And I then traded from May to the end of the year, and the return from May to December is about 16.99, about 17% return. So if you actually analyze it for an annual basis, it's about 25.48% return. Okay. The reasons got transferred funds from another account. This was an account that I started about 6.5 years ago with about $180,000, and I grew it to about now almost $900,000. So I'm looking to hit definitely over $1 million in the next couple of months. All right, really happy to say that majority of my students following my rules, who have taken my lessons, whether my online classes or my live classes in Asia, have done really, really well. In fact, some of my students have done better than me on a percentage basis. So I'm really happy for them. I always say that, what makes a great teacher? A great teacher is someone who can teach other people to be even better than they are. See, I believe that if you can't teach someone to become as good or better than you, you're not a really good teacher. And I've made my money. So what excites me nowadays is not really just making money, but being able to show people and help people to get the same results or better. All right. This is one of my students who's Matthew, and he's from Singapore, I believe, right? He attended my live class, and he says, right, year end, good time to be thankful for the many blessings, right? It's been about a year since I joined Wealth Academy. This is my live investment course I run in Singapore and Malaysia. Here's my year-to-date portfolio, 43.2% return for the year. All right, this account employs trading, options, and investing strategies. Thanks, Adam, for the teaching and sharing so much of your years of most invaluable trading and investing wisdom. All right. And then we have got this guy, Thong An, right? Thong An is a professional trader. For the last 5 years, he hails from Seattle, Washington, and he recently took my online course for stock trading, and pretty good year for him as well. He beat the S&P 500, ended up the year over 42% return, all right? And this was the S&P towards the last quarter, but S&P eventually went up 29%, but he still beat the S&P really well. An amazing thing is this: Thong An has a son who's 14 years old, and he started getting the son to trade as well. And you can see from this sharing on our chat group, he said, my son's performance so far. We use the same strategy, but he rides his winners. His favorite is the breakout strategy, which I teach, right? And our goal every year is beating the S&P 500. And you can see that his son, who's only 14 years old, is trading the markets and got 38.46% return for the year. So that's amazing. Amazing trader, amazing father, right? Teaching the son this lifelong skill. Okay, and we have got Oscar. I don't know how to pronounce his name. It's Schoenberg. He's from Sweden, I believe, right? And he says, "Hello, Adam. I bought your course. Was one of the best decisions I've made in my life. Last year, 2018, I had no clue what I was doing in the stock market. I ended 2018 with my portfolio down 17%. In early January, I bought this course, and at the moment, I'm up 43.37% for the year." All right, so I say anyone can beat the markets with the right attitude, with the right strategy, with the right hard work. And this guy, Yan Yi, who has actually been following me now for the last 5 years, right? And he's one of our volunteer coaches who actually helps to coach our new students as well. Okay, and we call him YY affectionately, and he's up about 37.41% for the year. Right, this is his statement from Interactive Brokers. Right, and this guy, his name is Bagus Utomo. He's from Indonesia. He first attended my live class over 10 years ago. 10 years ago, he's been following me for 10 years, and he's taken all my courses. He's taken my Forex course, my advanced options course, my stock trading course, my investment course, and he employs every single strategy, and he's a full-time trader from Indonesia, right? And he says, thank you, Master Adam, Master Bang, and Master YY. These are all our fellow trainers and coaches. You guys are the best community of traders and investors in the world, right? And he's up, guess what? A whopping 120% for the year, all right? For the entire year this year. So that was 2019. So what's in store for 2020? What are the opportunities that lie before us? Where can we make our greatest profits? How can we grow our accounts? What's the outlook for the new year? Let's get ready and let's dive in. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.